Welcome to another episode of Trends and Ideas. I'm your host, Brian Egley. My guest is S&P Capital IQ equity analyst Westcott Rochette, who's here to discuss investing in advertising companies in the wake of the recent merger announcement by two industry giants, Omnicom and Publicis Groupe. Thanks for being here, Westcott.
Thanks, glad to be here.
Westcott, what implications does a merger of this magnitude have for the industry looking forward?
Well, it definitely changes the landscape of advertising, that's for sure. I mean, you're combining the number 2 and number 3 ad agencies in the world, and you're increasing the scale across almost all markets and capabilities. I think the industry is still in a digestion phase about what it's going to mean for both for the competitors, the clients, and the vendors on how it's going to change the balance of power in the various relationships. You know, we think at minimum it's going to have the biggest impact on media buying and digital capabilities.
Well, do you see the other advertising companies potentially benefiting from this merger?
I think they definitely think so, and I would have to agree. I mean, anytime you have a merger of this size, there's going to be some dislocation. You know, you're going to have client or the employees that are going to be a little bit distracted as they try and figure out how they're going to fit in the new organization. There's going to be customers that are going to use the opportunity to reassess their advertising needs now, and at minimum you're going to have the competitive agencies that are going to play upon that uncertainty to try and pick off both talent and customers. So we think at minimum you're going to see an increased amount of account reviews, which is the bake-off between the agencies, that are going to lead to a greater client turnover than you normally would see.
Okay, now based on what you're saying, do you have a stock recommendation you can share with us today?
We have a buy recommendation on Interpublic Group, ticker IPG, and we actually were very favorable on Interpublic before this announcement because they had a lot of account momentum wins, and they have some specific margin opportunities that they've been building upon. You know, we think that this opportunity allows them to build even further upon that momentum, and especially as we head into 2014, which is a pretty banner year for the industry as a whole, we think it puts them in a very good position.
Okay, thank you.
You're welcome.
For more of Westcott's views on investing in advertising companies, we encourage our MarketScope.com subscribers to read a related Trends and Ideas story on MarketScope Advisor. It's called Mad Men Merger May Bring Fresh Investment Ideas. Until next time, thanks for watching or listening. I'm Brian Egley for S&P Capital IQ.